Let's start with the here and now, first of all, because the trade tensions, are they accelerating the push into digital trade finance, or has that process gone cold?
That's a great question. I think the way we see it, the move towards digitization in trade finance has been happening for a number of years. The study with HSBC, which we're excited to be launching here at Cybos, really shows that it can have a dramatic change on trade finance and the ability to bring in more volumes. We estimated, as you said, about 1.1 trillion in extra global trade volumes coming in. And this is about 40 to 50% of that will be in Asia itself, predominantly from SMEs who are looking to participate in global trade that they don't do today because it's quite difficult and cumbersome, as well as difficult to get financing as well. We'll also see people and corporates who are participating in trade today being able to expand their footprint and trade in new trade corridors, especially with some of the emerging markets. So we see the trade wars at the moment, or the trade difficulties at the moment, providing some maybe short-term hurdles, but the long-term shift towards digitalization will continue at pace.
Even before the trade narrative got so testy, Sen, digital trade finance didn't really take off. I mean, it seems like a no-brainer. It seems like it should have done. What was holding it back?
Yeah, that's exactly right. I mean, many people have tried to digitize trade finance historically. And the reason why it's failed is, there's a couple of reasons really. One is people have tried to digitize specific components of trade. So some people have done the bills of lading, some people have done electronic submissions from corporates and so on. But no one's really tried to digitize the whole end-to-end process. Now, what that's done is resulted in digital islands, and paper forms the gap between the two. So fundamentally, nothing's really shifted from many years ago. What's different about DLT today, or blockchain today, is that all the participants are looking to digitize the end-to-end process and share that information in real time in a secure manner across all the participants. And this will mean that corporates can then participate more effectively in a more simple manner. It'll be faster to process these transactions. It'll also be more efficient when they're submitting documents, and it'll also be easier to get financing, we believe, out of this process. So we think now with the new technology, we will digitize the end-to-end process. But this will take time. It's not going to happen all at the same time. The interesting thing here is the business case for each of the participants to invest is quite different. So if you look at it for banks, there's a very clear business case to invest. There's a huge cost savings. There's opportunity to provide new services such as financing, as well as trade facilitation services. But there are other participants within the ecosystem where the business case may not be as clear-cut, and they may take longer to invest in this technology. But in the end, we believe everybody will come along that chain and digitize the end-to-end process, which will benefit corporates and lead to these new trade volumes.